Hello guys, you're welcome to my YouTube channel. So this YouTube is all about the basics of trading. The basics of trading. Most of us doesn't know about forex trading. We don't know what it's all about. So this video is going to educate you on the basics of forex trading. So first of all, what is forex trading? Forex, the full meaning of forex is foreign exchange trading. Foreign exchange trading, the buying and selling of currency pairs. So you're buying when you're expecting the market to rise, and you're selling when you're expecting the price to fall. You're buying when you're expecting the price to rise, and you're selling when you're expecting the price to fall. So this is what we call forex trading. And in forex trading, we have the currency pairs, we have the piece, we have the leverage, we have most of them. Then we're talking about the currency pairs. So what we have here is currency pairs. We have the major currency pairs, we have the crosses, and we have the exotics. So these are the main three type of currency pairs that we have. We have the major, we have the crosses, and we have the exotics. So major represents a developed country, a developed currencies. They represent a developed currencies like the Euro USD, GBP USD, USD JPY, USD CAD. All right, let me write it out for you guys. We have the major currencies. We have the major. We have the major. The major represents the USD CAD. Represent the USD CAD. We have the Euro USD. We have the GBP USD. We have the AUD USD. We have the New Zealand USD, and so on and so forth. So here's the Swiss francs. So those are the major currencies, and their spreads are very low. Their spreads are low compared to the other, compared to that of the crosses, and compared to that of the exotics. And they are predictable and tradable. Like we have these are the USD card, Euro USD, GBP USD, Australian USD. We have the New Zealand USD, USD Swiss francs. So as more of them. Then we have the crosses, which is number 2. We have the crosses, which is number 2. Crosses. We have the crosses. Let me use a capital letter on this. Crosses. We have the crosses. Then the crosses are those currency pairs that doesn't include the USD at all. They don't include the USD at all, which are the odd card. We have the odd card, AUD, USD, sorry. AUD, AUD, USD. We have the odd card, sorry. We have the odd card, then we have the Euro, JPY, JPY. We have the GBP card. We have the GBP card, and then on some of them we have many of them, New Zealand JPY, and some of them. Those are the crosses, the ones that they don't include the USD dollar at all. Then we have the exotics, which is the third one. The exotics. We have the exotics currency pairs. These represent the developing currency pairs. The developing currency pairs like the Indian rupee. The Indian rupee. We have the Indian. We have the Indian rupee. Then we have the South African rands. Then we have the Singapore dollar. And then so more and so forth of them. We have the Singapore dollar, in South African rand, Indian rupee, and then Hong Kong dollar, most of them. So, and then those are the ones that are under exotics. So if you are to trade as a newbie, I'll advise you go for the major. Go to the major currencies that have a lower spread than that of the rest, and then trade with it. Trade that of the major. So, and then we have this is all about for the currency pairs. The currency pairs. Then we have the currency pairs. We have the how to read them. How to read these currency pairs. How do we read these currency pairs? How to read these currency pairs, which is We have Euro USD. Let's use Euro USD as an example, which I have here on my screen. The Euro USD as an example. Let's use Euro USD as an example, which I have here in my screen. EUR then slash USD. We have the Euro USD, which the Euro USD is the base. The Euro is the base currency, while the USD is the quote currency. Euro is the base currency, and then USD is the quote currency, which is the base, and then this is the quote currency. This is the quote currency because Euro is higher than USD. That is why it came first. If you look at GBP USD, you know that GBP is higher than USD. You see USD Swiss francs, you see that USD is higher than Swiss francs currency. That is why it came first. So those ones that came first are the base currency. Why the second is called the quote currency. The ones that came first are the base currency, while that's of the one that comes second are the quote currencies. So most of us do misquote this. You understand? Then we have Euro USD here is what which we have currently on this chart. Euro USD is what let's say that of price here. Euro USD is what 1.0985 and 1.09085, which is the current price Euro USD is right now. Let's check it out. Let me go to the refreshing button. You see, which we have here 1.098, 1.09085, which is the current price where market is right now. That is the current price where market is right now. So that is for how to read the currency pairs. The first is the base, and that of the second is the quote currency. The first is the base, and that of the other one is the quote currency. So how can we read pips? Okay, let's talk about pips. So I know most of us have been hearing about pips, but they don't know what it's talking about, how to read it, and all about so on and so forth. So let's talk about the pips. Let's talk about the pips, which is P. Let's use a capital letter and then PIP. PIP. What does it mean? What does it mean? PIP. Price interest point. Price interest point. Price interest point. That is the full meaning of pips. And it's the smallest price change of a currency pair. It's the smallest price change of a currency pair. So those are the prices that changes are the pips. Let's look at this. Which are these? If you notice where the current market is right now. So if you notice this market is currently at our 1.09085. So the pips here is the 8, which is the 4 decimal quotes after the 4 digits after the decimal point. Pips is the 4 digits after the decimal point. The 5th is called the pipette. So 4 digits after the decimal point, which is the pips, which is around here, which is it here. If you look at this, all right, it can't circle here. Let me just delete it. If you look at this, you look at it, this is it. There's 1.09085. Let me write it down. 1.09, 1.09085. So the pips here is the 4th decimal point, which is this 8 we are talking about, which is the 8. 8 is the pips here, which is 8. 8 is the pips. Why 5 is called the pipette? Because it's the 5th digit after the decimal point, which is the pipette, and the 4th digit after the decimal point is called the pips. It's called the pips. That's how we know, discover about the pips. That's how we know the pips. The fourth decimal point is the pips. So we are done with the pips. We come to the leverage. We come to the leverage. Then we have the leverage, which we have here. We have the leverage. Let me write it out so that we all can understand it. We have the leverage. We have the leverage. Leverage is the ratio of your capital to the capital the broker borrows you. The ratio is the ratio of your capital is ratio of your capital to the money broker borrows you. So leverage is the ratio of capital to the money the broker borrows you. Like we have different type of leverage. We have that of the leverage. I'll be telling you the one that is advisable for newbies to use. So if you are new into the industry, don't go for unlimited leverage and don't go for this. Don't go for this leverage is unlimited. Don't go for one ratio. Don't go for 1:2,000. This will finish your money. That's why most of us, if we don't know anything about the industry, we'll just come buy and sell, and then we don't know the use of leverage, we don't know the use of pips, we don't know the use of all these terms. So we'll end up losing our money. Once we blow our money, we'll be like, Forex is a scam. It's not, Forex is not for me. Forex is for everybody. Everybody is capable of trading it. What difference is the mindset that we have? What difference is the mindset that we have? You see that? So now, don't use this. The leverage that is advisable for you to use is, you see, leverage of 1:100 is advisable for you to use. 1:50 is advisable for you to use. You see this leverage, it should be in terms of this leverage. Don't think about the money a lot. If you think about the money, also think about the losses. Because once the market goes against you, how much are you willing to lose? Once it goes to your way, how much are you willing to win? You see that? So when you're thinking about your winning, also think about your losses as well. So the leverage that is advised for you to use is this. Okay, let's say, let me explain this down briefly to you. Let's say you're making use of leverage of 1:100. Let's say you're making use of 1:100. Let's say you're making a ratio of 1:100 and you have an account size of $50 or $100. You have an account size of $50 or $100. You have an account size of $100 or $50. So eventually, if you're using a account size of $100, eventually your $100 is being times by 100. So which is 1:100. So it means that any money you deposit will be under this one. Times it by 100, that is the account size you are using. And your account size, it won't be showed in your equity and your balance. This account sizes are being showed in your lot size. The kind of lot size you use determines. Because if you use the kind of leverage on a $100 account, there are certain lot size they will allow you to use. And there are certain lot size they won't allow you to use. So some people will be like, I'm using this and I'm making $2, I'm making $5, I'm making $10. I want to make $100, I want to make $200, I want to make $1,000, I want to make $10,000 in a day. All depend on your capital. Gradually grow your accounts. Gradually grow your accounts. Don't rush the market. Just gradually. Forex is a journey. It's a process. So process gradually, taking it step by step, until you become profitable and you start making your cool cash while sitting at home. So if this YouTube video is helpful to you, if you really learned one or two things in this video, do well to subscribe, like, and share to your friends to also get more new traders that will learn from this video as well. Thank you all for watching my YouTube video.